by a panel covering embedded finance, digital wallet infrastructure, AML, and fintech. And we have a wide variety of expertise from our panelists. I will invite our panel to come online, and I would like them to introduce themselves. And I think we will start with Rose. Would you please introduce yourself to the audience?
Thanks, Cameron. Hi, everyone. Thanks for joining. My name's Ros Marsh. I'm a senior legal counsel at OpenPaid. OpenPaid is a UK and EU regulated e-money institution. We provide embedded finance infrastructure to businesses, which allows them to access embedded finance solutions via a single API. We've recently launched our OpenPaid digital business, which will also allow our clients to trade in major digital assets such as stablecoins, enabling seamless and instantaneous movement between fiat and digital currencies. So I'm very excited to be joining this webinar. Thank you for having me.
Thank you. Imran, would you like to go next?
Sure. Thanks, Cameron. Glad to be here. So I'm Imran Ali. I'm a director within the payments consulting practice at KPMG. And typical kind of work that we do is working with clients on anything to do with payments needs, both domestically, internationally, and of course, cross-border wise as well.
Thank you, Ram. Ram, would you go next, please?
Thanks, Cameron. I'm Ram Sundaram. I'm a co-founder and chief operating officer of Therapy. I look after technology as well in Therapy. Therapy is a global cross-border money movement network. We cover account, wallet, and card payouts in over 150 countries and are licensed in over 31 jurisdictions. We'll talk more about Therapy as we go along. I'm glad to be here. Thank you, Cameron.
Thank you very much, Ram. Hugo, would you go as the next?
Yes, of course. Thank you, Cameron. My name is Hugo Remy. I'm Chief Executive Officer of Cardiff Limited. We are UK-based authorized electronic money institution, which is operating in the market since 2011. We are UK, US, Canada, Europe, Singapore, Hong Kong based, and we are principal members for issuing and acquiring for, I'll say, a pretty long time.
Thank you very much, Hugo. So without further ado, we jump into the topics. I would like to start with Rose, with the main topics. What do customers expect from cross-border payments in today's digital world? And Rose, where do you see the challenges that customers are facing when it comes to the speed of transactions?
Thanks, Cameron. So what do customers expect? I think in a nutshell, it is speed, transparency, and compliance, which is conveniently the title of this webinar. One of the goals of the G20 roadmap is tackling friction in cross-border payments. And APIs and digital wallets can play a really important part in that. So this webinar is really timely as payments service providers are looking to harmonize their APIs to reduce that friction. We all know the digital economy is growing. Customers want access not just to local payment rails, but to global payment rails now. So we've got SEPA, SEPA Instant, SEPA Direct in the EU, CHAPS, BACS, faster payments in the UK, ACH, SWIFT, and now the increasing use of blockchain and stablecoins as an additional payment rail, if you like. So what do customers expect, really? They expect access to all of those payment channels in a smooth and frictionless manner, which is one of the key goals of the G20 roadmap that we'll be talking about later. What are the challenges that customers face, you asked, is speed of transactions, really. So when we're talking about cross-border payments, one of the biggest challenges is making payments between different currencies or between different countries that are in different time zones. So let's say, for example, you're trying to effect a payment from Southeast Asia to South America. the local banks are not going to be open at the same time, or there's going to be a very, very small overlap. So it could mean that in practice, that payment could take several days, depending on what time it's affected. So that's, I think, one of the main challenges really is speed of transaction. And that's something that as players in the digital economy, we're all trying to solve through the use of APIs to reduce friction in those cross-border payments.
Amazing. You mentioned blockchain. That brings me to the point. What do you think about stable coins and how can they help?
Oh, I'm glad you asked that, Cameron. Thank you. Stable coins are one of my favorite topics, and I've been talking a lot about stable coins recently with the Payments Association and through other industry forums. For the uninitiated, stable coins are digital assets that aim to maintain a stable value. Again, the key's in the name, the clue's in the name rather. And they do that by reference to one or more fiat currencies or a mixture of fiat currencies and other assets. And how can stable coins be used to affect cross-border payments, you might be wondering? They're a type of digital asset. How does that work? One of the key use cases of stable coins, which is what OpenPayd is really interested in exploring, is to affect cross-border payments. And the way that can be done is by converting one fiat currency into another fiat currency via the blockchain. So it's what's called on-ramping the fiat currency into, for example, a stable coin onto the blockchain, and then off-ramping it into another fiat currency at the other end. And that, although it sounds very complicated and happens via the blockchain, it happens almost instantaneously. So contrary to those cross-border payments we were talking about before, where local banks might not be open at the same time and it could take several days, stable coins actually mean that if you use the stablecoin rails, as we call it, you could essentially effect that transaction almost immediately by using stable coins.
Absolutely. One of the topics that you also mentioned, and one of the biggest topics is opaqueness, and how is the transparency comes into this, and how does that work?
So transparency, again, is one of the key goals of the G20 roadmap as well. And really using stablecoins and blockchain technology offers increased transparency through that distributed ledger technology. Once a transaction has been effected through the blockchain, it's there forever. So it increases transparency in that way. And digital wallet providers play a really crucial role in this part of the payments ecosystem by providing access to stablecoin wallets on chain. So in order to affect that transaction that I talked about via the stablecoin rails, you would need a digital wallet to be able to convert your fiat currency into stablecoins, to on-ramp and off-ramp through the blockchain. So it would allow you to convert fiat to digital assets and vice versa. And we rely on digital wallet providers to partner with and help reduce friction in those transactions.
Absolutely. And then you mentioned the digital wallets that can actually then help and accommodate that. What about the security aspect of this? So that's something that
yeah, I think that's something that a lot of people are concerned about, is security. I would argue that digital assets are as secure, if not more secure, than traditional wallets. I'm talking about an old school traditional wallet that somebody could just, nick out of your pocket, but even, a digital wallet that wasn't necessarily on the blockchain. For on-chain digital wallets, you have what's called a private key. And that key is only held by the client or by a regulated custodian, making this a really, really secure payment method if nobody else has access to your secure key, it's not just like a 6-digit password, right? So it's a really secure method of payment if done in the right way, with partnering with digital wallet providers. And I'd argue that that type of payment could be more secure than what we call traditional payment rails.
Fantastic. I would like to invite the rest of the panel to chip in and give their views. Who wants to go first? Maybe we start with you, Ram, right?
Sure. Thank you. Lots of points there that Rosalind mentioned that are interesting, and I'd like to talk about. To start with, yes, customers do expect speed, but speed by itself is not really the the be all and end all of a transaction, right? We have to look at speed systemically. It's not just faster endpoints, faster APIs, and so on. You want resilient, 24/7, always on cross-border networks. It's not about milliseconds. It's about availability without excuse, right? You send a transaction, that money is immediately available. Now, what does that mean? That means essentially that the entire infrastructure, and when we talk about cross-border payments here, there are multiple institutions. There are at least 3 institutions in a typical cross-border transaction, 3 financial institutions, right? There is the sender's institution, there is the intermediary, a network like ourselves, and there is a beneficiary institution. There may be more. In a typical SWIFT transaction, there could be 4 or 5 when the correspondent banks come in. Now, all the reason traditional payments are slow is that all these systems have their issues, their ways of ensuring that the trust underlying the transaction, the actual transfer of money has happened, right? And Rosalind is absolutely right. There is a possibility that stablecoins can play a role there. We are working with that. Now, we look at stablecoin settlements in a couple of ways, slightly different from what Rosalind was talking about. And before I come to that, maybe there's something I'd like to do when we talk about wallets, is what exactly do we mean when we say a wallet? In this conversation, there could be at least 3 different things, right? When TerraPay talks about a wallet, the most common usage refers to the stored value instruments that are identified by mobile numbers in Africa, in Asia, in Latin America. There's no bank account or card backing that. These are absolute stored value instruments. They may not even be an app on a smartphone. It could be a feature phone with USSD, which is you type in numbers on a feature phone, right? Then, of course, you have the digital wallets that are what you see in Europe, in the US, in Western countries, which are smartphone apps that are front ends to a bank account or a card. And then there are the digital wallets that store cryptographic keys for stablecoin and crypto transactions and so on. So 3 different kinds of wallets. And they're not the same. They're completely different use cases, right? So when we talk about cross-border payments using stablecoins, we look at 2 things. It's a movement of value ultimately, but that movement of value can happen atomically per transaction or as a settlement that happens before or after a whole bulk of transactions. Typically, cross-border transactions are pre-funded. If you want them in real time, you need to ensure that the value is already there. So financial institutions pre-fund each other. And that locks in liquidity, that has a cost, that has time constraints. If you run out of funds and you have a surge of transactions, you're out of money, you have to stop business. So liquidity is a big problem, and that's where stablecoins can come in. If we do atomic settlement, if, for example, €100 transaction is going from Europe to Kenya, right? If that €100 comes in through SEPA from the customer to the financial institution, the network, like TerraPay, and then TerraPay sends that as a stablecoin, €100 stablecoin transfer to the financial institution in Kenya. And that financial institution in Kenya now converts that to Kenyan shillings and pays that out over the local ACH in real time. Now you have real-time payments happening without any issues whatsoever, right? Without locking in liquidity, without the high costs associated with it. But this is a choreographed ballet that has to work very well together. All parts of this, there are multiple, now you're added a 4th institution, which is the stablecoin issuer here, right? And now all these have to work together efficiently. It's really this that we are solving when we talk about speed, getting all these multiple institutions to work together seamlessly and ensure that the value is transferred in real time.
Amazing. Thank you. Imran, do you want to add anything to?
Yeah, I think it's really, I think just building on what Rosalind and Ram said, the impact of increasing speed of a cross-border transaction is not just between, I guess, 2 parties and the intermediary, and it has an end-to-end consequence, right? So what we're seeing is, because domestic real-time payment schemes have increased significantly over the last decade or so, and we've seen huge volume growth in real-time payment systems, the customer expectation now is that actually every time I make a payment, it should happen very quickly, right?
Yeah.
Whether it be domestically or internationally. And we've seen international players improve on the speed of cross-border transactions over the last decade. We've seen new challenges come in who've
Yeah.
got a great customer proposition, who are delivering that kind of capability to their customers. We've also seen regulatory movements. So across Europe, we've seen SEPA Instant, and that's become mandatory now for banks to be able to send and receive real-time transactions. So we're seeing now the regulatory and the infrastructure catching up to meet an increased customer demand. But it does have an impact on banks, digital wallet providers, payment service providers, right? They've got to be able to process in real time. They've also got to be able to spot fraud in real time and error in real time. They've got to be able to reconcile pretty quickly in case anything's going wrong. So there's a huge impact. And it's, the title of the webinar is speed, transparency, and compliance, right? And I guess one of the things is, are all three of those compatible? Make things faster? Does it make it harder for it to be compliant and transparent, right? How do you juggle all three together? And I think stablecoin is being increasingly looked at as potentially being the solution to that, right? I think stablecoin still got a long way to go. We talk to a lot of clients who are heavily interested in this space, who want to be rolling out stablecoins, who want to develop their own stablecoins, but don't really understand what that means. But actually, it's been talked about, as a potential solution that enables some of that synchronicity that Ram talked about. So actually, you start to be able to clear and settle at the same time between two different parties, effectively giving you real-time transactions, but also being able to give you some of that transparency as well, which is what customers really want. So a full audit of where that transaction has gone through, but also being able to provide that information back to the customer who's sending the transaction, as well as the beneficiary of the transaction as well. So all these things are starting to come together. It's a very difficult act to balance, but we are seeing industry movements heavily towards this space.
Fantastic. Hugo, may I invite you to provide your insights?
Yeah, of course, with pleasure. I'm not concerned at all, like other speakers, about speed, API, etc. I'm concerned about real problems. It's compliance, because when it comes to the payments, we got beautiful technologies. Everyone are talking about the speed and etc. But it doesn't matter. Once the payment got stuck because of the compliance reasons, customers are not satisfied. And majority of the banks, financial institutions actually make own judgment about the payments. Very often they are not adequate, let's say. They freeze customer money, customer faces damages. When you're not in payments, you can speak as lot as you wish. You can say beautiful speeches, but it doesn't matter in reality, because you should think from the customer perspective. Customer actually receives damages on daily basis because of the pure management of compliance departments, because of subjective judgment, and many other things, and many banks and financial institutions doesn't understand how they can damage the business. Some business can become bankrupt because of one decision from some compliance department, and I'm more concerned about this part, trying to protect the customers, and trying to find a way how we can automate transaction monitoring, how those judgments can be quick, efficient, because believe me, if people send money right now from US to, I don't know, India, it will take maybe a couple of minutes by many banks, or many financial institutions. The problem would be not with the speed. The problem would be if it will not stuck somewhere, And then if some bank or financial institution, their compliance departments would be overloaded or not, that's a real problem. Nobody talks about that. Because I'm not saying it because I'm working on this on a daily basis. I know the pain of the customers. I don't want to speak right now about some fantasies.
Understood. Thanks. Very, very insightful. I know, Ram, you talked about the digital wallets, right? But can we a little bit go and expand on the role that the digital wallets play to drive faster, more efficient cross-border payment solutions? And try to get the other panelists to also input to that. Yeah, maybe we start with you, Ram.
Absolutely. So just picking up on what Hugo said, right? I mean, this is something that I wanted to add. It's in the context of what we're talking about so far.
Yeah.
Speed is all right, but what really needs to accompany the transaction, the data that needs to accompany the transaction in order to make it safe and secure and compliant, right? There is if you look at how stablecoins and blockchain transactions are structured, there is really no data that accompanies a transaction there. A transaction is just a transaction reference, right? It's moved from one wallet to another, and that is it. But we have created a whole infrastructure. There's a massive migration happening in the traditional financial industry to move to ISO 20022, which is a very structured, very elaborate framework for carrying data that needs to essentially that serves the purpose of this cross-border requirement. We are obliged to screen every transaction that passes through us. We are obliged to run AML, CFT rule checks on all this. This requires data. We need to know who the sender is. We need to be able to deduplicate that sender from a list of similar senders on a sanctions list, right? We need to know why the transaction is being sent. What's the purpose of the transaction, the source of funds, the relationship with the beneficiary, if it is a remittance payment, for example. If it's a corporate payment, there are other pieces of information that you need to analyze. So all of this, when it needs to go cross-border, it doesn't come through in the traditional payment system, which is why the ISO 20022 migration is happening.
Yeah.
But when we talk about stablecoins, it doesn't come through with stablecoins either, right? So you still need to have that data coming through. And you need to have that data. If you're talking about real-time transactions, so TerraPay, we process millions of transactions a month, and 97% of our transactions are delivered to the beneficiary's account in less than a minute.
Yeah.
But in that 1 minute, we need to screen the transactions against multiple sanctions lists, depending on where the transaction is coming from, where it's going. We need to run rule checks to make sure they're not on any, it doesn't look like a terrorism financing transaction or a money laundering transaction. We are in a good position to do that as a network because we connect to multiple financial institutions. So we see transactions from the same senders or the same beneficiaries, but across different financial providers. Right? But we need to deduplicate. Again, that adds a lot of data. The thing with wallets is, wallet systems are new, they are rich in data, they can provide all of this in real time, and this data typically is not available in a lot of banking systems through globally. It's coming in, but it's not there yet, right? Europe is just introducing VOP now. Things like VOP have existed for years in other countries, right? In some banking systems. But all wallets, we are able to access that information in real time. And it's not just a confirmation of the name, but also some additional data that can be used to deduplicate a beneficiary on a sanctions list, perhaps, right? So wallets and the technology capabilities that wallets offer essentially help us make cross-border transactions cleaner, safer, more compliant, and therefore specifically address what Hugo was talking about as well.
Yeah. Fantastic. Good that there is alignment. Rose, Imran, so do you want to add anything to that?
I was just going to ask about AI. It was interesting what you were talking about there around getting all of this data, and the wallet providers are almost, in a unique position because you're almost aggregating all of that data. Are you using AI solutions at all to help with that data collection and analysis?
We are. So one of the things that we realized was that, we thought this whole sanction screening, for example, and monitoring is not core business for us, right? I mean, there are specialized companies in this field. We have tried out pretty much all of them. And like I said, we have a high volume of transactions. Sometimes we peak at 3,500 TPS, right? That's what we've seen, transactions per second. There are no providers who can screen transactions at 3,500 TPS. If you have to deliver in less than a minute, we have to have those providers keeping up with our throughputs. So we had to do this in-house. We brought this all in-house. And what we are doing while we bring it in-house is to figure out how AI, LLMs essentially, can be used for various things. So one of the more interesting problems that we solve with LLMs is name matching, right? Now you're all familiar with the false positives and false negative issues on sanctions lists. The more accurately you're able to match a name, the more cleaner your results are, and the faster you can process the transaction. And the traditional way, what we built when we started 10 years ago, was that you had multiple stages of matching a name. You do phoneme matching, you do sounds like matching, you reorganize the names, first name last and last name first. You do there's a lot of different steps that you do to match names. And you get reasonable, and you can fine tune it to different countries depending on their conventions of usage of names and so on. But then with LLMs, we realized that we could actually map names on what's called 3D vector space, not 3D, 768 dimensional vector space is what we use to try this out. So you're mapping names, and it's like you have just as an analogy, if you look at a three-dimensional representation of the solar system, right? You have all the planets in different places. Planets that are closer to each other in three-dimensional space actually have a lot of similarities to each other. And the same way, when you map names in a multidimensional space, vector space, names that are closer to each other are actually similar to each other. But this can happen much faster. We are able to do very accurate name matching in about 0.3 milliseconds, which used to take actually about a second or so earlier. And that's the kind of thing that we do with LLMs internally that we have figured out. We are also looking at, of course, agentic usage of LLMs for first level monitoring, those kind of applications that pretty much everybody is doing. But I thought the name matching use case was something that would be interesting.
That's a very interesting input. Thank you. Imran, Hugo, do you want to add anything to this?
I guess just to say that the difficult job a digital wallet provider has is insulating the complexity from the user, right? So the digital wallet provider has to connect into a multitude of different types of clearings, which have all different timings, cutoff times, etc., different costs, etc., and somehow has to be able to make the proposition, the customer experience, very simple and straightforward, right? You want to make a payment to X place, to such a person. This is how much it's going to cost you, right? This is how long it's going to take, and then got to figure out how to integrate into all the plumbing, right? And how to make that transaction as easy and as quickly as possible. And I think that's a difficulty that we see a lot of digital wallet providers having, because what you don't want to do is then replicate that complexity within your own internal infrastructure. You want to try and simplify it as much as possible and then make an easy experience for end users. And so we see payment orchestration engines, for example, becoming increasingly popular, where actually you can be quite clever in terms of how you route that transaction and where you route it based on what the customer's preferences are. And so you can start to wade through some of that complexity and start to make it simpler for yourself.
Amazing. Hugo?
Honestly, I have only one thing to add is it's very easy to, not very easy, I would say it's relatively easily to check, I would say, payments inside one environment, when you're big enough and and you make payments internally. But when it comes to international cross-border pairing payments, it's very complicated because you can't actually influence anyhow on the counterparties. So, I mean, like you can make any kind of approach you wish in your company, only within your environment, with your customers. But when it comes to third parties, there are so many complicated things which we should be aware of, like different jurisdiction, different legislation, different cultural aspects as well. And you face so many non-technical issues which actually influence on the payments, that it makes everything, very, very complicated. And that's why I feel that the cross-border payments are, I would say, sometimes even dangerous, because more money could get lost, you could be stuck, you can not receive answer for, I would say, ages, weeks, and you don't have a lot of tools even how to influence that.
Fantastic. Thank you. Now we covered, the customer needs and what the market needs and the digital wallet. We discussed even the AI topic in a very nice use case. Let's move into the regulatory landscape, and I would like to start with you, Imran. What is the impact of the G20 roadmap and AML regulation on wallet providers and bank partner banks?
Yeah, thanks, Cameron. So, all the things that we've been talking about, I guess what would make life really easy and simpler for everybody is if there was a set of common standards that everybody could abide by, everybody understood, and could then plug into and use. And that's pretty much what the G20 roadmap is trying to do for cross-border payments. So for those not familiar with it, G20 roadmap was kind of born or created during the G20 summit in 2020. So 20 of the largest economies in the world agreeing that they needed to focus in on making cross-border payments much more simpler and easier and cheaper. And that's set about a chain of initiatives and actions being driven by the Financial Stability Board in coordination with the Bank of International Settlements. And there's four key objectives around or four key areas that the G20 roadmap looks at. So cost, bringing down the cost of a cross-border transaction, speed, so making them faster, transparency. So this is more about giving end users clearer visibility of those transactions, and then access, so enabling more players to plug in and enable cross-border payments. So that was the original vision and objectives. That's been broken down into a list of sort of priority actions and areas. They have a full roadmap plan that they're trying to get through, most of which they want to complete by 2027, some of which will go along till 2030. And those priorities are broken down into three main areas. One is payment system interoperability, so linking payment systems together. Legal, regulatory, and supervisory frameworks, which is really interesting. How do you look at all the different legal and regulatory frameworks in different countries and kind of bring about some kind of synergy and coordination amongst those different frameworks? And then the third one is around data exchange and message standards, which panels already talked about data, how important that is. And message standards, that's very much around the ISO 20022 migration that we're seeing globally for payments. And the types of things that they're looking for, just to give you a sort of bit of flavor, they're looking at central banks coordinating and working closer together. They're looking at how to connect faster payments or real-time payment systems together, right? So we see an example of this happening in Nexus, which is happening in Asia, where a number of Asian countries are essentially plugging their real-time payment systems together. There's also AML rules are being looked at, particularly FATF as well, and how can you coordinate and synergize some of those across geographies as well. Looking at non-bank access and regulation and making it easier for those to plug in as well. And something someone's already mentioned, I think it was Rosalind, around API harmonization as well. So actually, how do you standardize the use of APIs and what APIs they are so people can plug into those as well? I think the progress has been, if I give my view, I think the progress has been good on the G20 roadmap. There's been some active conversations. I think within the G20, there are some stronger voices than others. There are some playing a much more leading role than others. The G20 community, the G20 roadmap, is now being extended to another 70 jurisdictions because obviously this is a global initiative, not just limited to the 20 countries. And obviously we've seen a lot of work being done around message standardization. The complicated bits of work are going to be around regulation and legal frameworks, and how do you bring those together because every country is different. And some of the I guess ambition is very, I think it's going to be very difficult to achieve. So cost, for example, how do you bring down the cost of cross-border transactions given sometimes the number of intermediaries that are involved and the cost involved in processing that transaction? You can only really do that if you reduce the number of intermediaries or you pick another type of infrastructure to process those transactions. So the Financial Stability Board publishes annual reports in terms of its progress on the G20 roadmap. I think I would probably say there is one thing for standardization and rules to be created, but where it really matters is where the rubber hits the road. So where it starts to impact companies and they have to make changes, right? So they have to make changes in terms of how they conduct sanction screening or money laundering or fraud checking, how they have to interact with different types of APIs, different clearing systems, etc. And I think we're probably getting to that point fairly soon in terms of actually that impact happening on banks, PSPs, digital wallet providers, those kind of players in the market. So it's certainly something to keep a much closer eye on. And I think over the next couple of years, we're going to start to see G20 roadmaps start to really come into fruition. And some of those things that they've been working on start to turn into things that people on this call will have to really worry about and understand the impact of their organization.
Amazing. Now, listening to you, there are multiple facets of this: interoperability, regulatory alignment, cost reduction, transparency improvement, digital currency adaptation. So there are the multiple facets of that. Hugo, do you have any views on the G20 roadmap? and anything to add from that perspective?
I would say I'm not so experienced as Imran, so I can't say that I'm following, this really strongly. I try to focus myself mostly on the UK market, and like I say, internal one. The only thing which also, worries me is many regulators around the globe, trying to scrutinize the rules, and make it more, hard. From one point of view, I completely support it because the more professional market players will become, the better for everyone, for the consumers. But from another perspective, I'm just worried, that if there will be still the space for the business development, and the many regulators and let's say government organizations didn't understand how expensive it is to maintain all the infrastructure, how much cost is needed, and where to get this money for.
Yeah.
Because it's not, many people think, okay, we will, try to implement some new regulation. Oh, it's great, but nobody thinks where the companies will find money from, because they will need to cut the budget for the salary from the people, or they will, not be able to hire additional people, or a lot of things, So I'm looking at this more from practical point of view, always, I'm low to the ground.
Valid approach. Yeah. Ram, do you want to add anything?
Yes, the G20 roadmap is top of mind for pretty much all the banks that we speak to nowadays.
Yeah.
Everybody's looking at it, and in a way, it is interoperability, transparency, inclusion. This is what we do at TerraPay, so we are the right people to speak about it. One of the things that we are working on with this is our recent partnership with Swift, where we're enabling Swift banks on Swift, members of Swift, to be able to send money to wallets. Now, so far in Swift's history, Swift has only been for bank accounts. It's been a network of banks being able to transact to bank accounts. Now with us, banks are actually able to send money to wallets using their same Swift integration without making any changes, because API integrations they are definitely better but then they are harder for banks to do, and harder for banks to do quickly. But doing this using existing Swift MT or MX messaging means that they can immediately start sending transactions to wallets globally through our global network. And we bring the same speed to it. We bring it's very affordable. It brings those cost reductions immediately. And it also it's not just the wallets. We also give access to real-time payment rails in over 50 countries where those rails exist, instant payment systems. So it gives them access to everything. And so the G20 roadmap is actually something that we are seeing play out in conversations with us every day nowadays.
I received an interesting question from Russo Irena. She's asking, which of the G20 goals do you think is the hardest to reach? And how can companies work together to solve this?
It's a really interesting one. I mean,
Yeah, I think so.
I think they're all hard. I mean, if you
But if you have to rank them, right?
if you look at ISO 20022, I mean, that's had a very long migration process, right?
Yeah.
And we are hopefully, fingers crossed, getting to the end of that. But it's had an impact on every country, every bank, every central bank that's been doing it. I mean, if I was to pick one, I think when you start to look at sort of AML, sanction checking, fraud rules, that kind of area, I think just because of the sensitivity around it,
Yeah.
and we are in a world. Interesting enough, G20's roadmap is supposed to bring everyone closer together and synergize and standardize, but actually we are living in a world where sovereignty is actually becoming quite important as well for countries, right? So,
Yeah.
so how they manage money laundering, fraud, sanctions within their country, they will feel like that shouldn't be dictated to, by another country or by another body, right? So I think that potentially is one area where it might be difficult to achieve a level of standardization. Now you would hope that, the G20 come to an agreement to raise the bar so it actually satisfies everyone's needs. But I think that's probably one of the areas that's going to be most sensitive. And I know from experience working with clients that
Yeah.
AML, fraud checking, sanctions checking, etc., is a cumbersome process, but actually a really important process when when you're handling payment. So that's probably one of the that's probably the area I would pick out. The others is it's kind of standardization of rules, standardization of technical specs, technology, etc. And we're seeing actually good progress in things like interlinking of schemes and things like that. That's happening already. So I think those are probably areas that are difficult, but we're seeing some progress in those. So that's the one I would probably call out.
Rose, any views?
Yeah, I agree with all of that, and I would just add to that the importance of APIs, because that's really key to all of this, and the interoperability that you mentioned, Imran. So I'm not a technologist. I am but a humble lawyer. But what I've seen is when at OpenPaid we've been partnering with digital wallet providers or banking partners or what have you. From a legal perspective, I'll be getting the contract in place, and I'll say yes, the contract's all agreed and we're ready to go. And what holds it up is the technical integration. We'll actually have everything else ready, and it's the technical integration that's holding it up. And that's because the way I see APIs working, they're almost like the Lego bricks that you need to use to connect the pipes. And the difficulty is that some people are using Lego, some people are using Duplo, some people are using stickle bricks. Anyone with kids will understand this analogy. And sometimes it just doesn't stick together. And for once, it's, people can't say, oh, it's the lawyers that are holding up this transaction. It's actually the technology integration. So I think with that, the harmonization and the ISO harmonization that you were talking about, I mean, the ideal scenario would be everyone just all agrees to use Lego bricks from now on, and that will make it easier. I'm oversimplifying here, but I think that's one of the key challenges, and one of the things that the G20 roadmap could really help with, at least from my perspective.
AI is going to help also in the technology side, for the development of code and source codes. So we will see something coming in that side. So I think let's move to the last question and last topic. This is a good one for me. Basically, it's about partnership and collaboration. So as you say, it's difficult to achieve anything if we are not working together and collaborating. Hugo, I would like to hand in this question to you. How can banks and financial institution partners with fintechs or digital wallet platforms work to enhance their cross-border functionality? How do you see that?
Of course, Karan. I would like just to add one thing to Rosalind, and the compliance are the one who are holding the funds. So it's not, there are many issues, and speaking with the banks and e-wallets, I can remind my conversation with one of the high street banks from the state of New York, many years ago, and they actually, without disclosing the names, point out to one major problem. They don't know how to control the MSB, money service businesses, or e-money institutions, and that's how they struggle, to deal with them. I think that banks can definitely benefit, because majority of the banks, for example, I don't speak about high street banks, or any well-developed fintech banks. Majority of the banks got a pretty old-fashioned technologies, which are not allowed to make, I would say, international payments and cross-border payments and all these things. It's there because of the many limitations, And the fintech companies like e-wallets, they usually are more flexible, much more, developed from a technical point of view, and it could be a great synergy, but in reality, it doesn't work because the banks will never ever trust the e-wallets, and they will not allow to delegate this responsibility, on behalf of their customers, to the e-wallets. So I strongly doubt that there will be a possible way how banks can deal with e-wallet companies. Maybe, if it's a big fintech company and the bank, then there could be synergies, there could be an option how they can work together. One we speak for the mass market, until the e-money institution, MSBs, will have a strict regulation as the banks, I don't believe it won't be possible, because imagine that some of the bank will wire, I don't know, payments to some small EMI and something goes wrong, it will be liability to the bank. So in theory, beautiful, a lot of ways, we can talk about this for hours, how they can partner together. In reality, I don't see any options, only when the consumer itself, wires a payment to own, wallet, from a bank account, and then on behalf make some payments. But I'm sort of being skeptical about everything.
That's the view. That's good. Any other views from the panel?
I'm a grumpy, I always feel.
I have another view on that. We work with banks all the time, and I we don't have those kind of issues. I think we see a lot of trust between banks and us quite often. But I do understand where you're coming from, Hugo, on this, and I think it's a lot to do with the language that fintechs use versus the language that banks use, right? You may talk about the same thing, but when you're using different terminology or a different approach to it, um, it you don't really communicate. And if you're in a bank and you're used to doing your compliance processes in a very specific way, and then this fintech comes along and they are compliant, they have policies, they have regular audits and inspections, all of that. But when they talk about compliance, they talk about compliance in a very different way, right? And for a bank, it's easier to say, I don't understand this. This is too risky
Yeah,
because I don't understand it,
yeah,
right? But if you're able to talk the same language and get that understanding of what you're doing across, the partnership works. So it's often about just terminology, aligning yourself with the way that banks have to do things. So I'll give you an example. When we were working in the US, this is a big problem in the US, right? Compliance in the US. So we changed the way we approach banks there. We started approaching them from a perspective of helping them fulfill their BSA obligations, their reporting obligations, right, under the BSA. And it changes the conversation completely. So I would say if you this space is all about collaboration, right? You have to work with everybody else. This is an interoperability space. Nobody can do everything themselves in a cross-border payment scenario. And
Okay.
to do that, you have to align with the language and the thinking of your partner.
Can I ask a question? What if the banks are not willing to collaborate with you? Because I know there are different cultural approaches, and there are some Nordic countries, for example, with whom it's almost impossible to work because their banks are strict. They use a local national approach, to some payments, and it's completely different. It's like sandwich, it's completely different, totally different, from approach in States in UK, and customers in the United Kingdom will not understand why they requested, such compliance request on a payment, and they will simply decline it, and opposite, the bank reaction would be why they're not providing it to us. And this is a real problem. I would say from my personal experience, it's a huge, massive problem.
I understand this. We face it. I'm not saying it's easy. I'm saying it's something that can be worked on. What we have realized is that we need to have local teams everywhere, right? We need to have people who understand. It's not the country's culture. It's about that particular financial culture, financial institutional culture in a country, right? You have different approaches to things, and sometimes it's about education. Not sometimes, quite often, it's about education and exposure. We do workshops and seminars with in different countries where we actually say this is how we do things. This is how things are done in the US. This is how things are done in Brazil. This is how things are done in India, right?
Mhm.
Not a sales pitch, just a knowledge sharing exercise. It works.
Yeah, it works, and what you are saying is completely right because this could work if they would listen, Because look, for example, in the United States, a transaction, for example, for 100 grand, I'm giving an example, and I think nobody will even pay attention, to this. Comparison with, for example, some European countries, what it will be completely red flagged, So it depends also on the market size as well, because for some markets they will look after even one penny, some will not look at the millions, And when we come to cross-border payments, when a payment from one country, which is completely fine there, is coming to another country, everything crashes completely, And I see here a massive issue.
So again, from our experience, this is a platform issue. So effectively, your platform needs to align or level effectively all the markets that you're working in. you don't even send a transaction unless you have all the required information that you need to ensure that it will get processed on the other side. We don't really do, we do some $100,000 transactions and kinds like that, but most of our average transaction value for wallets on our platform is $150. For bank accounts, about $650. It's a very different market, right? And we can't stop a transaction and ask a question. If we do that, we have lost whatever margin we had on that transaction, right?
It's different approach.
Not on that transaction, possibly 100 transactions, because manual effort is very expensive and we can't do that. It has to be platform driven. Therefore, your platform has to level this across all the countries that you operate in.
So I think we need to come and wrap up. It's an interesting panel and the discussions. It deserves a follow-up webinar. It's so much to cover. I've got one question still from Michelle Maffei. Is one of the biggest problems bank faces onboarding into multiple locations. How would you suggest bank can approach simplification and rationalization of onboarding processes? So we touched it a little bit, but I think this is true, right? In the context of friction of the onboarding. How do you suggest, and is there any view on that one? Who wants to take that?
I think Imran and Rosalind might be the best ones.
Well, we have a lot of banking partners, and we do have some friction in terms of the onboarding process. But I think it, like you said, it comes down to the language that you use, and I wouldn't say that we've experienced a great deal of problems with that. How could banks simplify the process? I mean, I think some of the harmonization that we were talking about will help, and just communicating with one another better, simplifying the requirements that they need. I mean, you've got to balance that with obviously ongoing compliance, but I don't think it's rocket science. I wouldn't say that I've had a terribly bad experience with this, to be honest. I don't know if anyone else wants to chip in who's had a different experience.
If I chip in, I'll be selling Terrapay though. You don't need to onboard IMTOs in various locations. You just need to onboard Terrapay, and then you have all the IMTOs all over the world.
That's the answer. That's the solution.
Yes.
Yeah. That's a good one. Any last remarks? Maybe we start with you, Rose, before I close the.
Thanks. Yeah, this has been a fascinating discussion for me. I feel like I've learned a lot, even as I guess as the lawyer in the room. There's a lot of stuff that I still need to upskill on. So this has been really fascinating for me. I think my key takeaways will be from the G20 roadmap, that need for harmonization, and focusing on what the customer needs really. And I think. I get if you've just plugged Terrapay, so I'm going to plug OpenPay, but this stable coins being one of the biggest innovations that I've seen in the last few years. But not just that, looking at how we can improve the customer experience across all rails, whether that's stable coins or other banking rails, and focusing on what's best for our clients and how we can work together to achieve that. So I've really learned a lot, and thank you everyone for having me. But I think probably, like you said, Cameron, we need a follow-up session so we can answer some more of these questions.
Exactly. Hugo, any last?
I need to apologize for being grumpy now. No, everything was excellent. I would like to thank you all the speakers. It was a really great discussion. And I always try to be more practical, skeptical about everything. Because I would like to solve the most let's say day-to-day problems, most important on day-to-day, and then to talk about something more, let's say, for the future. Yeah, thank you.
Amazing. It's important to have multiple side of the story and look at the different sides. So it makes it the whole discussion much more richer. Imran, you're.
Ever since I've worked in payments quite a long time, and ever since I can remember, people have been talking about how to make cross-border payments cheaper and quicker.
Yeah.
And here we are talking about it again. I think the thing that's changed over that time is initiatives like the G20 roadmap. Governments are taking this seriously, and the G20 roadmap is driven by central banks. they're taking it seriously, and we have seen immense movement in this space. It does take time. It's complicated. It is hard. It costs money. But we are seeing innovation in this space, and we are seeing regulation and standard moving in this space. I think the thing to watch out for is how does that impact your organization, right? So what changes do you have to make? What changes do you have to be ready for? And cross-border payments, the ambition and the vision, I guess, is as easy to make a payment cross-border as it is domestic, right? Anywhere in the world. And we are moving towards that. So, how do you, as an organization, maximize that opportunity, but also how do you best get ready for it as well?
Fantastic. Ram, do you want to go last?
Thanks. As Imran said, that is the goal. That's the goal when we started Therapy, to make a cross-border payment as easy, as simple as a domestic payment. And, we are all in the payments industry. It obsesses us. We can talk about this for hours together. We can do all that. But it has real world implications, right? And we see this in our network quite often, especially for low value, real time cross border payments. Making that easy transforms economies, it transforms people's lives. I said earlier that the average transaction on a wallet on our network is $152. For some countries, it's as low as $40, right? But of that $40 transaction is actually could be life-changing for the people who are receiving it. And therefore, it's important for that to be reliable, instant, all of that, right? So ultimately, we need to keep that in mind when we talk about all of this, the complexity of what we do. But how do we actually ensure that the end customer has that real-time payment, that money that is there when they need it? And I think that's what should drive us all in this.
Very wise words. Thank you very much, Ram. So with that, I would like to come to the closing remarks. Thanks again, Rose, Hugo, Imran, Ram, for making such an interesting discussion. And it's been fantastic. Lots of good questions, lots of good discussions. I'm sure you have got follow-up questions, and with that, you can send any follow-up questions to the events at the paymentsassociation.org. Feedback survey will be sent shortly, and please, we love to get your thoughts on that. The webinar recording will be emailed to you within the 48 hours. And on behalf of the Payment Association, thank you again, and we look forward to seeing you at future events. Thank you.
Thank you.
Thank you.
Thank you.